Okay. I want to welcome everyone to today's session. We are going to go for the basics as we normally do on the last session for the month. Can everyone hear me okay? Please just type in the chat. Say yes. Okay, perfect. Okay. So we want to go through and start from the very beginning, okay, and what the process is. Everyone should be looking for the ideal, best, perfect trades first, okay? The way trading works is you're supposed to have a high probability strategy. In that strategy, it's looking for that so-called perfect trade. There's no perfect trade, but the highest probability strategy out there, okay? Once you do that, then what happens is the other strategies are derivatives from the first one, where maybe you're relaxing the rules on something or something else happens where it pretty much overrides one of the rules in the basic strategy, okay? So I want to go through the ideal trade right now and go through that step by step and make sure you guys understand it. I'm going to keep everything very, very simple and not bring in certain things, okay? Certain things I'll bring in, certain things I won't. And the reason why I'm not going to bring everything in is that I want you to see the ideal strategy and what it looks like, and let's talk about that. And we're going to step for that step by step, okay? In every trade, there's 3 phases to a trade. There's a setup. In that setup phase, we concentrate a lot on that. Reason why is we're doing the #1 thing that's a big advantage for our trading system, forecasting, okay? Why is there a huge advantage to forecasting? One, we're looking for past events to repeat, okay? When these events repeat, we got a high probability of success. So what you could do is you could study for these past events to repeat, and then what you could do is when a setup occurs, you could forecast to see if I enter that trade, what is my probability of success? Will it be good, bad, or not? Based on past history, if your answer to that question says that if I enter this trade and history tells me it doesn't have a high probability to succeed, you should walk away from there. If past patterns in history tell you that if you enter the trade and you got a high probability that it's going to work, then you do enter the trade with a trailing stop. Why? Do you need to stop if the past events have a high probability? Well, just because an event occurs in the past does not mean it's going to occur again in the future. And that's one of the reasons why we have our stops and we maintain them for that reason and also for volatility, okay? So we're using forecasting to predict if I enter a trade, what's my probability of success, okay? That's very critical because it saves you a lot of money in losing trades. Not only does it save you a lot of money in losing trades, but it also saves you a lot of time. This is something traders do not evaluate, and it's very critical. Time is very critical too and has a dollar value associated with it. So if you're forecasting, not only are you saving money in a losing trade, but you're also saving the time that was spent in the losing trade from setup to execution to exit and so forth. And also you're saving a lot of emotional costs too. So there's a lot of indirect cost associated with forecasting too that you save. Reason why is the time that you spent on that losing trade could have been the time that you spent on a winning trade. And that's the cost of consequences, okay? So a lot of traders look at the monetary value, but they do not look at the emotional and basically the time value, which are huge, believe it or not, moving forward. And that's one of the reasons why we do forecasting, okay? The second thing that's a huge advantage that we have over everyone is timing. Timing is very, very critical. You want to make sure that you're not early, you're not late at all. It's a difference between a winning and losing trades. How many times have you guys entered the trade where basically you entered a trade, you got stopped out and went your direction? It probably frustrates you. And if you're a trader, you've experienced that. Every trader has experienced that over and over and over. And that comes down to timing, okay? So two things our system concentrates on is forecasting and timing. That's the big differential between us and every system out there and us and every trader out there. We want to sit there and basically maximize our time and makes the most money per hour that we work, okay? And that's the key value there. So in the three phases we talk about, we have this trade setup, and this is the most critical phase right there, the setup phase. A lot of people do not concentrate a lot of time on that, but that's the most critical phase. Reason why, this is where you're forecasting. Once you enter the trade, you go for what you call entry validation. We validate on the entry bar and the second bar. So we always validate two bars, which is entry and second bar. Why? There's a lot of games being played out there. There's volatility that exists in everything, which can make fake moves. And this is why you need to do the entry validation. They're very simple rules that we keep to, and they've worked very effective. And they basically make sure that when you enter the trade, you do not get stopped out at max risk at all unless a black swan event occurs, okay? Now, once you pass these two phases here, you'll have the trade management phase. This is the exciting one. Reason why is the less consuming one completely. In the trade management, all you're going to do is change your order, your stop to the green dots as a trailing stop, and pretty much stay in the trade until you get stopped out for a profit or a small loss. So the trade management phase is very little time. In fact, if you look at each phase, the majority of the work is at the very front, and then it gets less and less as you progress forward to the three stages of a trade, okay? Is there any questions so far on that explanation? No? Okay. The very first thing you're supposed to do is you're supposed to find opportunities that basically have a shaded area. You want to sit there and concentrate on one thing and become the master of one thing. That sets up your foundation, and it sets up things that you could learn how to optimize at that one point. And this is one reason why we create these shaded areas, is to keep traders focused on that particular shaded area. I want you looking at what's in the shaded area, not to the left of it, not to the right of it. Everyone understand? So your goal is to master everything that's going on in the shaded area. And from the events that's happening in the shaded area, you basically are learning how to forecast. Everyone okay with that? Yes? Okay. So first thing you're doing is you're looking for a shaded area. Okay. I'm not going to go through details, but if you have a bullish setup, it's going to be a green shaded area where you're betting on the instrument going up. If you have a red shaded area, it basically means you're betting on the instrument going down, which is bearish. Okay, so shaded area, let me write this clean, must have a shaded area. So if it does not have a shaded area, that basically means you walk away from this instrument. Last night in the US session, one of the students was saying that basically use a scanner, and he found a couple of opportunities there, and they didn't have a shaded area. He thought there was something wrong with the system. No, it's not at all. Basically what it means is that the scanner is going to find everything. Reason why is the scanner looks for trending opportunities, counter trend, and everything out there. It's up to us to do the filtering on the scanner or to do filtering on the charts, okay? So the subscriber was using the free version, which does no filtering except looks for the shaded area on the markets. So if he sits there and does that, then what you have to do is go to these charts and go through the symbols and make sure they have a shaded area. On the opportunities that don't have a shaded area, there's no opportunity there for trend trading. There could be an opportunity for counter trend trading, but that's not what we're going to cover here. The reason why is we're focusing on the trend trading opportunities, which are the highest probability trades in the chat room. Okay, so first thing you're looking for is a shaded area. The second thing, and this rule is not forgiving at all. If you go against these next two rules, you will lose. Okay, and I'm emphasizing that a lot. Reason why is I know there's aggressive traders, I know there's conservative traders. The conservative traders always listen to me and follow the rules. The aggressive traders will sit there and start bending the rules. Why? Well, they're anxious to sit there and find trading opportunities over and over and over. They also believe in that concept that basically there should be a trade every day and I should make money every day. And it's not really a correct concept. Okay. So I want to emphasize that if you sit there and break this rule, you will have a high probability of losing. I'll tell you where you can relax on some of the rules in a minute, but this one I would not do at all. Reason why is this rule here, the next two rules dictate how you are trading. If you're trading with the higher time frame, if you're against it, and so forth. We are trend traders. You have to set up your foundation to be a trend trader, and that's where your foundation should be set. If you want to be a counter trend trader, that will happen with time. But first, you've got to start doing trend trading and become successful with that. If you don't, there's no way you're going to understand counter trend trading at all. Is everyone okay with that rules? Yep. Okay. So first thing I'm doing is I want to look at the color of the D value. Okay. D value, sorry, D color should be same as the shaded area. That means if you have a green shaded area, then the D value should be green. If you have a red shaded area, the D value should be what? Red. Everyone okay with that? Yes? Okay. If it's not, then you walk away from this trade completely. I would not even look at it at entry, what happens, nothing at all. I completely would walk away from this trade without any hesitations whatsoever. Okay. 3, you want the D value to be greater than or equal to 1. Okay. And what that basically does is the very first, the color of the D value makes sure you're trading in the same direction as the higher time frame. By having the D value equal to or greater than 1, basically means it can't be 0. Okay. If it's that value is higher than 0, that basically means that you have a low probability of it consolidating and high probability it's in a trending scenario. The higher the value, the stronger the trend on the higher time frame is. Okay. The D values here and the D color basically means that you do not have to look at the higher time frame and analyze it at all. We're saving all the work for you here. Okay. So back to what I was saying, you just got to make sure that D value is not 0. That's the key thing. Don't worry about what other values are. They really are not relevant at all at this point. The key thing is just make sure it's not 0. It's higher than 1, equal to or higher than 1. Okay. So these are the must 3 rules that you have to make sure that you maintain and always follow. Any questions up to this point? Nope. Okay. The next one we're going to go to is %S. Now, a lot of people are trying to figure out what the formula of this % is, what it does, and so forth. Okay. You don't need to worry about what the formula is. We're not here to sit there and enter a university and be students of learning for the rest of our lives. We're here to make money. So what really matters is what that value is and what it means and what it doesn't do. Okay. So in order to sit there and forecast, okay, you want to make sure that this value here is greater than or equal to 75. Okay. If the value is greater than or equal to 75, we will color this number a green. Okay. So if you can't remember the numbers, do not worry because we do use a color code scheme to help you out. Okay. If this value is really good, in other words, if it's 90% or higher, we will color it blue. If it's blue, it's telling you it's got a very high probability, and it's telling that this trading time frame, which in this example right now, the 30-minute, has a lot of power to go up. Okay. And the key thing in these values here, and these % values here, is they measure the trend. okay? You want these values to be high, okay? The lower the value, that means the trend, the existing trend before the shaded area was not that powerful. The higher the value, it tells you that the existing trend before the shaded area was very good, okay? And why does that matter? Well, trading is all about basically recognizing there's a good trend and then placing pullbacks or breakouts. If you have a weak trend and then you do a pullback and breakout, your probability of success is low. If you have a strong trend, then you know your probabilities are high wherever you place a breakout or pullback order. And that's what this percentage value is measuring. All you need to know is that it has to be above 75% or higher. If you have a scenario where basically at the set percent S phase, it's blue, where it's 90% or higher, that's extremely, extremely, extremely good. Everyone okay with that? Okay. The next thing we're doing is we're going to look at these blue dash lines. And they have to be before the blue breakout dots. Okay. And let me show you where they're at here. They're right here. They're right now, you barely could see them, and they're right there, okay? And they're actually above the blue breakout dots. These lines here represent the higher time frame support resistances, okay? If you're in a green shaded area, they're gonna be typically above price because that's what it's looking for, is where is the next obstacle. If you're in a red shaded area, they're pretty much below price because that's the support and that's the obstacle there, okay? The key thing is the highest probability trades is when I enter this trade on a 30-minute, for this example, I do not want to see those blue dashes above me at all. If I see those blue dashes above me, that means the higher time frame has a resistance there that is going to interfere with my trade. Everyone understand that? So the best trading opportunities is where that dash line is below or at those blue dots. So in theory, you want that dash line to be, let me show you the different points. Here, or you want it to be here. So anywhere pretty much at the blue dots or below the blue dots for a bullish case. Everyone good with that? Yes? Okay, that is the best high probability scenario. We will show you some scenarios where it's not. In fact, in this example here, right now it's above price, above the blue dots, which is not a high probability situation at all. Okay, if you move forward, and remember, things can change. Okay, so if you look in this trade setup here, initially the higher time frame dashes were here. Now, all of a sudden, it's just below the blue dots. So things have changed, okay? And these are key things that you have to look at, okay? So my rule of thumb is that as long as the D value here, the color and the value is good, then I'm willing to sit there and put the trade on, and on entry, I will evaluate everything. So if you look at everything in here, the rules I can relax on in forecasting are these two here. So I'm going to put a little star by them. Okay. If you're looking for the perfect trades, you're not going to relax on them at all. You're going to make sure that these are always good. If you're an aggressive trader, rules 4 and 5, even if they're not the values that you're looking for, then what you can do is still put the trade on and make sure at entry, basically everything is good. Everyone okay with that? Okay. Conservative trader is not. So in this example here, if a conservative trader had looked at this from the very beginning, the first 3 bars of the setup, they would not have placed the order. Aggressive trader would have. If the conservative trader had looked at it right now, now they would say, okay, I could do that here because the dash lines are below my blue dots and this is a good, valid trade. Okay. So now, sorry, my window icons are all messed up. Okay, so this is a trade right now with this dashed line being below my blue dots or at it. I can now place the trade. That means basically my entry will be at the blue dots. My initial stop is the green dots, and it will become also my trailing stop too. And my target, or what we call preserve mode, will be these blue crosses. Okay, now I want to talk about these blue crosses. Our goal as traders is to get to those blue crosses with high probability. Okay, our goal is to get to those blue crosses. If we enter a trade and we get to the blue crosses, that means that trade is successful. If we don't get to those blue crosses and we get out of the trade for a small profit, that means that trade was a little successful but not completely. Does everyone understand? Yes? Our goal as we increase and become more experienced traders, we should have more and more trades that get to the blue crosses. Because what initially happens is that you're going to enter these trades, okay? So a lot of them will sit there, go to the blue dots, then they'll sit there and go up, and then they'll go close to the blue crosses but won't hit it, and then come back down. And in a lot of those cases, the green dots have moved to a point you're going to still be profitable in that trade. To me, that's not good. As you become more and more experienced trader, the number of trades that you get to the blue crosses should be high and should be increasing. So if you're valuing yourself as a trader, you're evaluating how many trades are now getting to those blue crosses over and over and over. The more you get, the better you become. That means you're understanding things and finding higher quality trades more and more. If you get to a situation where you're getting less trades that get to the blue crosses, it basically means you're a desperate trader, you're not patient, and you're not looking for the high quality trades, and sooner or later you're going to get burned. Is everyone clear with those comments? Yes? So it's a perfect way to evaluate yourself is to see how many of your trades get to the blue crosses. This is something I do on a monthly and quarterly basis over and over and over to make sure that I am sitting there achieving the results that I want to achieve. And also making sure that I am holding myself accountable to being a good trader. Everyone good? Questions? No? Okay. So everything looks good in here, okay? And we're now able to proceed forward, okay? So we have finished the setup phase here completely. We've placed the trade here where our entry is right there. Our initial stop is the green dots and our blue cross is basically the target, okay? Now, we placed the order. We're not doing anything. If we enter the trade, we're gonna know because our brokerage will tell us that we enter the trade. So I'm gonna just move forward in time. Let's move these forward. It's boring. Oops, 1, 2, waiting. Okay. So now we entered the trade setup phase. Now we're going to enter the validation phase. Okay. Now let me just set up the chart here so you could see everything. Okay. Now it's a little small, but I want to make sure that we see everything in here. Okay. Let me see if I could do this here. Okay. Now, on the entry validation, as I mentioned earlier, there's a lot of games being played, okay? So the very first thing you want to look at is that %E, okay? So you want to make sure that %E is basically value of 80% or higher. Okay? If it's basically 90% or higher, then it'll be blue, and that's really, really good. If you're over 100% or at 100%, that's extremely high, and it tells you that you have enough juice on the trading time frame to get to those blue crosses with high probability. So if you're looking for the perfect trade, you want this value to be 95% or higher, and preferably over 100%. Those are the highest quality trades where you know you don't need help from the higher time frame at all. The trading time frame has enough power to sit there and help you to keep on going up. Is everyone clear with that? Okay, so if you're an aggressive trader and you want to go against some of the rules, you better make sure that this value is 95% or higher. That's the only way the trading time frame is going to help you. If you don't, basically you're going to need help from the higher time frame to get to those blue crosses. Everyone okay with that? Okay, so the percent E, you want to make sure it's 80% or higher. Okay, the second thing you want to do is you want to make sure that the percent E is greater than or equal to the percent S. Where'd my percent go? Percent S. Okay. You want to make sure that this value, that the strength is increasing. Okay. If the strength is not increasing, that's not good. And that's what this is. So you want to make sure this percent E value is greater than or equal to the percent S. If it is, that tells you you're in a good situation moving forward. Okay. The next step here is to look at the crosses. You want to make sure you have a blue cross. Okay. So on the entry bar here, I look here, the color of the cross is blue. That means basically I stay in this trade here. Okay. If it's any other color, I basically exit the trade. Okay. And the fourth thing you want to do on the entry bar and the second bar is make sure there is no question mark. Okay, so you want to make sure there's no question mark on the entry bar. If you have a question mark there, that means there's something wrong with this trade. And typically, if you get a question mark on the entry bar or the second bar, it typically means volatility is there. It's too much volatility, and that's not good at all. A little volatility is perfectly fine, but a lot of volatility is not good at all, and it basically could sit there and mean a black swan event has occurred, and you don't want to be in that trade at all. Remember, we're here to trade patterns that repeat. We're not here to trade anomalies at all, okay? So it doesn't matter what the results are for a black swan event or volatility at all. Reason why is those are not long-term events. You could make money on the short term, but that we're here to achieve a scenario where we're making consistent profits over and over and over. Everyone clear with that? Yep. So these are the rules here. And what you want to do is you want to validate all those 4 rules here for the entry bar. If any of those rules are bad, then you would exit the trade and you don't need to do anything else. If it passes the first rule right there, then you validate the second bar too. You always want to validate the entry bar and second bar. If this does not pass the rules, you exit the trade. If it passes the rules, then you're done, and now you enter trade management phase here. Okay? So now, these 2 bars here have a blue cross. There's no question marks. The percent E is blue, so it's extremely high probability. And basically, if you look backwards here, it's higher than the percent S. Okay? The other thing is, now you could validate the blue cross here too. Okay? And let's talk about that. Remember, we mentioned at the very beginning, you could enter if the blue dash is not correct, you could still place the order, and then you have to validate here. Either way, on entry, you're going to validate where the dashed line is, okay? So you're looking for a couple of things. If that dashed line in the last bar of the shaded area, which is right there, was at the blue dots or below, you're perfectly fine and you're good to go. Reason why is this bar here hit the blue dots, it broke the higher time frame, it broke the single time frame level, So we enter the trade. When I enter the trade, I also broke these dashed lines here. That means basically I have the higher time frame that is in sync with me, and it's going to help me. That means if I sit there on entry, break those dashed lines, that means the higher time frame is going to help me. Now with the 121%, I really don't need the higher time frame with me, but either way, I'm going to take it. Why? If I know I have 121%, I know I got a high probability to get to the blue crosses. If I also broke the higher time frame blue dashes at the same time with this, then I got a high probability I'm going to break those blue crosses and keep on going higher, and I'm going to achieve a 5-to-1 or more reward risk. So my goal is that when I look for high quality trades, I don't look for them only to sit there and go to the blue crosses, but I also look at the situations on them breaking the blue crosses and keep on going too, okay? If I see a low scenario of it breaking the blue crosses, then I'm going to use those blue crosses as my target. If I see a high probability of it sitting there breaking them, then what I'm going to do is once I get to the blue crosses, I'm going to take 50 to 75% of my positions off and use a tighter stop, okay? So in this situation here, the dashed line was below the blue dot. That's perfectly fine. That's a good situation, so I don't need to worry about that at all, and this test passed. The other thing you could look for is these dashed lines moving in the shaded area. If they're moving in the shaded area, that basically means the higher time frame is confused and they're not going to interfere with your trade. Everyone understand that? Okay, that's a sign of weakness which you could look for. And you could see here that the higher time frame is confused and basically means now I could bully the higher time frame. That means whatever I do, I could bully the higher time frame and force the higher time frame to think in my direction. Everyone understand that? Yep. Okay. So now everything in this trade is good. Now I'm basically in trade management. And trade management, all I'm doing is I'm adjusting my stop to the green dots until I get to the blue crosses. Okay? Everyone okay with that? Yes. Okay. So now we're going to move forward. I'm adjusting my stop to the green dots. Every bar changes. I adjust my stop to the green dots. Okay. Give me 1 second. I'm still adjusting my stops. Boom. I hit the blue crosses. Now, once I hit the blue crosses, I have an option to get out completely, or I could take 50 to 75 positions off and tighten my stop. Okay? So right now I hit the blue crosses here and you could see my stop is still down here and it's far away. Okay? So right here I could completely exit the trade. That's one option. Second option is I could sit there and liquidate 50, 75% of my positions. Okay? And then the second part is where you have an option to tighten up your stop. If you go under the indicator here and you choose this value here, true, if this is true, then what will happen is once it gets to the blue crosses, you'll automatically tighten up the stop. If you click on F, it will not tighten up the stop at all, okay? So I'm gonna keep it to true and let's see what happens here. And you can see on the next bar, the green dots start to move up a lot more and going forward, okay? So now we're just gonna stay in this trade here until it hits the green dots in the rest of our positions that we have remaining, assuming that we liquidated 50% or 75% of my positions. So I'm just gonna flip everything here, here, and here. Boom, 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 boom. We just keep on going until we hit the green dot. And all you're doing is your job is to basically adjust your stop in your brokerage platform to the green dots. On this bar here, we exit the trade there completely. You're not thinking about this. You're not saying, well, how far this is gonna go. You're not gonna guess. You're not gonna do anything except follow the green dots. That's it for trade management. That's all you're responsible for doing at the trade management phase. Is there any questions so far? Yes, no? Okay. So pretty simple, isn't it? Okay. Now, this here is the trade going forward. Okay. Now, let's look at some other situations. And let me pull those trades up. Now, this is the ideal scenario here. Now we're going to start looking at some distortions. Okay. Let me just find these trades. Okay. CAD Switzy, 2 hour time frame. We're just waiting for the charts to load, and they're here. Okay, so here's a red shaded area on the trade here. When the shade began, it gave you 8D. The value, the color of the D is red, which is perfect. The value is not 0, which is really good. The percent S was 87. That's really good. Now, the problem comes down to in this red shaded area here is that these dashed lines are not above my entry at all or at it. They're below. Okay, so this makes it a distortion trade, not the ideal trade at all. Everyone okay with that? Okay. There was a question. What about the question marks in the setup? For right now, we're going to ignore that completely. Okay. I just want to keep to the basic rules for right now. So here, this is not a good setup at all. But we're going to go ahead and place the trade because remember, entry is what really matters. So we wait, we enter the trade here. When we enter the trade here, we look at this percent E. It's blue, so we know it's really, really good. It's also higher than the percent S, which is good. And also the cross here is blue. So on the entry bar, everything looks good there so far. Then we look at the dashes. The dashes here have moved here inside the shaded area, they moved. And that tells you that basically means I could sit there and bully the higher time frame completely. Is everyone okay with that? Yes? So in this trade here, boom, I sit there and keep staying this trade for the entry bar. Second bar, I go for the same process. It's a blue cross and there's no question marks in the entry or the second one. So I stay in the trade here and let it go. Everyone okay with that? Yes? And notice how we're bullying this trade here. Okay, and that's exactly what happened. Now, notice one thing. It got to the blue crosses and then reversed. Everyone see that? Yes? Why? What's the difference between this and the other trade? In one of them, we could choose the blue crosses as targets and get out of all our position. In the other one, we don't choose the blue crosses as targets. Anyone know why? The higher time these blue dashes held. Exactly. Remember, the best trades is where on entry, I break the higher time, these blue dashes here. On the previous trade, when I entered, I had broken the blue dashes, and that basically increases my probability to sit there and break these blue crosses in the future too. In this trade here, when I entered, the dashed lines moved to here. So there's no way I could break them until later into the stage. If that's happening later into the stage, that is not good. To a point, the probabilities for us to break the blue crosses becomes low. So at that point, I would use these as targets, okay? So I would exit this trade here at the blue crosses, and let's say it breaks it. If it breaks it, then I'll put the trade back on. But without that there, the breaking, I'm going to use this as a target because when I entered, I did not break the blue dashes at all. Is everyone clear with that? Yes? So I'm defining now in more detail on when to use those blue crosses as targets compared to using them as what we call preserve mode, where in preserve mode, you take 50 to 75% of your positions off and basically keep the rest of your positions going with a tight stop. Any questions, guys? No? Okay. Now, I know there are other optimization rules, okay? They're listed in the manuals, okay? One of them is that if you have question marks in the shaded areas, what does that mean? Well, that's the optimization technique to help you eliminate some losing trades. There also is a rule in the manual where you're looking for black crosses in the shaded area. That's also part of a scenario there. If you have black crosses in the shaded area, that increases your probability of success. So if we go back to that Bitcoin trade a minute ago, and you really want to sit there and optimize things completely, we'll alter the trading plans. Here, where right here in the setup phase, you also want to make sure that, or actually we'll sit there and not even do it there. We'll do it here in the entry validation here. And we'll put it, whoops. We'll put a star by them because these are optimizations, is, if I could ever type, make sure there is a black cross in shaded area. And 7, make sure there are no question marks in the shaded area. Everyone good? Yes? Do you feel like it's now a complete trading plan? What do you guys think? So I'm just going to position this here so I could take a snapshot and send this to you guys a little later in the chat room. So just bear with me. Okay. Any questions so far? No? Okay. So we're going to look at one more trade. Let's look at here we go. New Zealand yen on a 240. And that was on the 18th. Okay. Now, if you look at this trade here, okay, and you analyze this trade here, okay, if you look here, this has a valid D, you can't see it, but it is red and not zero. The 86% is good, okay? The problem in this one becomes the dash line here. So we place the trade. We enter the trade here. It has a blue cross. There's no question mark. This is 80% or higher. This is blue. That means you have a lot of strength into this trade here, okay? Now, the problem comes down to these dashed lines here, okay? So now what do? The dashed lines did not move in the shaded area, and they're below my entry. That means I have no help from the higher time frame at all. Also, by the positioning where they're at, the probability of me sitting there breaking the blue crosses pretty much goes away. Does everyone understand all this so far? Yes? If there's any questions, feel free to ask them right now. Okay? So notice what I said. Everything looks good. The dashed lines are here to a point. I know that I don't have any help from a higher time frame. Even though I'm trading in the direction of the higher time frame, I still have no help unless I break those dashed lines. Okay? It also tells me that my probability of breaking the blue crosses is low. That means all I'm going to be able to do is trade from the blue dots to the blue crosses with high probability. Everyone understand that? Yes? And there can be exceptions to the rules, which are pretty much where volatility, a black swan event can occur. Okay? Now, you have a decision to make. Do you have enough strength on this time frame here to sit there and get to these dashed lines here and break it so that you can get to the blue crosses? When you break it, the higher time frame will help you get to the blue crosses here, but you don't know what's going to happen after that at all. Everyone understand that? Yes? Okay, so here's what I do. If this value is blue, the higher the value, the better it is. Okay? At that point, and it's also, of course, you want it greater than the %S, which is part of the rules. But what I'm looking for is if this value here is high, then I know my trading time frame has enough juice to sit there and take it down, and I'll at least take it down to the halfway mark, which is right there. You guys see that? If this value was 85%, I would not stay in this trade at all. If it was 87%, I would not stay in this trade at all. When it's over 90% or higher, now I could start thinking about entering this trade because I have enough juice on the trading time frame to take me to those blue dashes and possibly break them. Everyone understand that? Yes? Now 90% will give you a high probability to get to those blue dashes, okay? If you're above 90, in this case you're at 94, then you got a high probability you could break them. Everyone clear with that? Yes? Now, if it was 95%, then you could possibly break it on the first shot. If it's this value, let's just say that. If this was 100%, then we know we're gonna break this for sure. Everyone good? If this value is 84%, which is less than 100, then you have to see what happens here. Notice here, it got to the dashed lines and it didn't break it. That's a caution flag for me. I have to be very careful now because this could reverse on me, okay? So in the scenario where you are gonna trade through this here, okay? And this is not at 100% completely. What I would recommend to do is when you get to the dashed line here, agreed? And if you did not break it, I would change my stop to break even. Everyone clear with that? Okay. And you know you're getting out at the blue crosses, which is a target, which is completely good. Now, these dashed lines, notice one thing. I'm using the power here to determine if I have enough power to get to these dashed lines if they're not in a perfect scenario. Not the perfect scenario occurred because they're constant in the shaded area and they're also below my entry, which serves as a problem. So when you have those two situations there with these dashed lines, this value here is very critical. Do you guys understand that? If all this is too complicated, then sit there and just look for the ideal rules, and that's it. And we're in those ideal rules, you're looking for this dashed line here to be above the blue dots or moving in the shaded area, and that's the perfect situations for you completely. Everyone good? Questions? Okay.